Hey everybody, Courtney Smith here, and I want to talk about one of the themes that I am focusing, and I'm using this theme in our Navigator programs, which is kind of our elite group inside the Wealth Builder family. But I wanted to talk about this and share it with you. You see, the FAANG stocks became very, very popular a number of years ago, and the FAANG stocks were Facebook, Amazon, Netflix, and Google. Okay, great. These are great companies, no question about it, and they became the darlings. But what happened is that these FAANG stocks then started, the whole picture changed. Those FAANG stocks, and then add in Apple, now you're accounting for most of the NASDAQ. Okay, so the NASDAQ has now become dominated. Throw in Microsoft and Intel, a few others, but basically the FAANG stocks were dominating the NASDAQ. So you had the average stock in the NASDAQ, and then you had the FAANG stocks, and often they would diverge. And so we ended up with a very concentrated index for the NASDAQ. Now, the second thing that happened is these companies, and I'm talking about the FAANG stocks, but particularly Facebook, Twitter, Google, those three, let's focus on those three, became too big for their britches. So they became under political and tax pressure, but basically they were no longer under pressure in the market because they are so big and powerful, but they came under pressure from government. So let's start out with a couple of things. Number one, and they're under pressure from both the left and the right and from Europe. Okay, so let's focus on those. Europe just wants money. That's their main focus. They want taxes. So they're increasing tax rates, they're adding taxes, they're enforcing taxes. They're saying if you make any money here in Europe, you got to pay taxes on it at European tax rates, not American tax rates. So they're under pressure to pay literally tens of billions of dollars. In addition, now antitrust suits are starting to come through the European government as well. In other words, Google, you've got 80% of the search market here in Europe. That's too big. We're going to have to break you up. We're going to have to force you to send some search traffic someplace else so that you don't have 80%. So taxes, antitrust. Here in the U.S., you've got, well, taxes is always there, but that's not a big issue here, actually. What the big issue is freedom of speech and antitrust. So on the right wing, you have a tremendous amount of, the right wing really believes that particularly Google and Twitter and Facebook are censoring right-wing opinions or non-politically correct opinions or anything that challenges the orthodoxy. And that's mainly coming from the right wing, a little bit from the left wing. Then you've got the antitrust argument against these big players. And that's coming mainly from the left wing, but also somewhat from the right wing. So when you see bipartisan attacks from both freedom of speech and from antitrust, I'm pretty sure Congress is going to do something about it in the new year. They won't do it here in the lame duck session. They'll wait until the new government is in place. And Joe Biden will go along with both of those issues, I think. So what we're going to see is we're going to see a lot more regulation. Now, what does that mean? Are they going to go out of business? I don't think they're going to break up Google into 50 different Googles, one for every state like they did with Standard Oil. Okay, I don't think they're going to do that. But what it does mean is that the growth of these companies, Google, Twitter, Facebook, is over. It's over. That's it. So you can expect that these companies are never going to be the darlings going forward. They're dead. So let's take a look at them from a technical perspective as well. But I think and they're great companies. They'll continue to grow. I'm not saying they won't, but their growth rate, instead of skyrocketing, is going to become boring. It's going to become boring. It's going to be 10% earnings growth per year, and these companies are generally overpriced for that low of earnings growth. Okay, so there's a lot of vulnerability in the FAANG stocks, which is why I call what the market is going to be doing is defanging. So here's Apple, which is kind of a FAANG stock. Hit a high, back at the end of August, gone nowhere since. Let's come down here to Amazon. Hit a high end of October, going nowhere since. The only one that's still growing is Google. Google made a new high recently. That's the only one that's really technically good. Although in a way you could say Twitter, but now it's under pressure. Jack Dorsey looked kind of idiotic at the congressional hearings this week, so he didn't look very impressive. Where's Facebook? Facebook is down here at the bottom. Zuckerberg didn't look all that bright. And look, Dorsey and Zuckerberg are geniuses as far as I'm concerned, but they didn't look very good in front of the senators that were grilling them. And by the way, the senators look pretty idiotic too, most of them. Ted Cruz seemed to be quite on top of it, and he was acting like a prosecutor. But these executives were kind of going like, deer in the headlights. I don't know anything about that. Now, in a way, Jack Dorsey looks that way all the time. But look, he's a genius. There's no question in my mind that he is. But anyway, the point is that you can see Facebook is going nowhere. Microsoft going nowhere. It's not really a FAANG stock, but it's a big tech stock. And then Twitter here got cracked a little while ago, and it'll probably drift nowhere. So technically, these defang stocks, not very exciting. Google did make a new high. That's the only one that's exciting. But I think what's going to happen is the pressure from Europe, from the United States, is just going to keep on squeezing them in a vice. And the innovation that these companies have brought, the excitement that they've brought, the fast earnings growth that they've brought is just going to disappear. Do I want to be short? No. They're still going up. The problem is they're probably overvalued. They're probably going to go in for periods of long sideways action. Maybe they make a new high every so often, then they go down. But they're just not going to be the stocks that you're going to want to focus your portfolio on. You're going to want to focus in other sectors. All right, everybody. We'll talk to you later.